Hey, good morning traders. It's 11:37 here on Wednesday, the 9th of September. Just been a really interesting time in the markets recently, and I just want to talk about correlations and risk on, risk off, and how markets move when there's a particular movement in one currency. So bottom right hand chart down here is the dollar index. We've got the S&P 500 just above that, and then we've got gold on the top right, and to the left we've got Aussie yen. So all traditionally looking at dollar strength and risk sentiment. So for risk sentiment, obviously if the retail investor is looking at trading in a risk appetite, i.e. risk on, then we'll be looking at the indexes moving traditionally north, going up in value. And as we can see, if we watch the crosshair, as the S&P 500, that's the chart in the middle on the right hand side, as that's going up in value, you can see the chart on the left, the Aussie yen, traditional risk on currency move, is also going up. But through that period, if we look at the top right, you can see gold has an initial impulse move to the upside, and then that's been consolidating. The chart on the bottom right, which is the dollar index, you can see that same move has been depreciating the majority of the time until we come down into this sort of falling wedge, declining channel down here, which we've recently just broken out of, and we're pushing up towards the 94. I'm just going to enlarge that chart so you can see. We've got a long-term weekly trend line down here that the market didn't quite make, but we were forming this correction pattern where essentially the market's running out of steam. The world was selling dollar, and that's all everyone was talking about. But then obviously we get this opportunity where price breaks out. Key barrier for us is 94. If we break through 94, expect to see 96 in coming weeks. So what does that leave us in terms of trading opportunities? Well, if we look at the index of the S&P 500, yes, we've seen a strong sell-off, and we've seen a strong sell-off in the Nasdaq. We've seen a strong sell-off in the Dow Jones. Tech sector's been hit specifically harder, but I would expect that maybe we could see a little bit further decline on this. Yes, we've come back down into those previous all-time highs, but we've surpassed that. So it wouldn't surprise me if we came back to test them and then push down a little bit lower for another move. Now, if we look at it on a smaller time frame, you can see the cyclical pattern is still intact, where potentially we'll test this swing low area here, and then we'll push back down towards that 32.50, maybe a little bit lower. So if we are going to continue to see the risk off sentiment, the risk off vibe, then this rising wedge, or this pattern that we're seeing here forming on Aussie yen, we would potentially expect to see this break, and I'll be looking for the market to push down, and then we'll look for some sort of correction pattern, and then we'll go and look to trade it short into at least sort of the 73 even handle, and maybe even lower depending how the risk vibe continues. Now that is also going to play out with another chart that we can look at for risk sentiment, which is Kiwi yen. I'm just going to remove all drawings. So for anyone that does follow us on our free Telegram channel, you will have had this trade sent out, which was a short from up here, and you know, we closed it out. All our free subscribers, they'll have taken 2.5% out of this trade yesterday. We did have a target down here, but cumulative across 3 trades yesterday in our members group, we banked just over 5%. So once 5% was on the table across multiple charts, that was it. We were closing it down, targets hit, and we were essentially looking for a pullback. So what would that look like? So a little bit like what we just discussed on S&P 500, where price could potentially rally into a structure high. Now that could be somewhere through this area here. So we've got a set of rules that will allow us, should the market reject this area and start to roll over, i.e. come up here like this and then push down, we'll look to get into that and trade it back towards 69.20. There is a possibility that price could push a little bit higher, although you know, it's not something that I'll be favoring. I do expect the dollar to continue, and I do expect the risk off sentiment to continue, but we will be ready just in case that price could actually push up a little bit higher towards the 71 even handle, these swing lows and spike lows in here. But either way, we'll be looking for trading opportunities to get from either 70.50 or 7100 and trading with that continued risk off sentiment, which is trading those risk currencies to the short side and buying the safe havens, whether that's the US dollar or the Japanese yen. So if we look at that in terms of on a Kiwi chart, very, very similar. We're looking for price, and just clear all these so you can have a look at it. We just go up slightly higher time frame. We've got, again, a major structure. We've got our price forming, nice formation, where we would potentially expect this market to break out of this move here. It could come down, and then we'll look for it to do something like this and push a little bit lower. And if we look at this on a weekly chart, that will coincide with forming a head and shoulders formation in and around this area, around the 6300 to 6250 area. You can see the structure level that the market is, where it's rejected from, and it plays out beautifully with the risk off vibe and dollar strength, where we're looking to see this market decline into around this area. And then obviously the next call will be dependent on what the markets are doing. This is why it's really important to understand correlations. So we are expecting further downside on Kiwi and Kiwi yen, but now it's a matter of, right, let's see if we can get our pullback into structure, and then we'll use our set of rules to trade with that. Now, if you are interested in our rules and how we manage our positions and how we take advantage of markets like this, and understanding the correlations between risk sentiment, dollar strength, dollar weakness, using commodities also to identify where the next potential trading opportunity is, then why don't you attend one of our free masterclasses? We'll give you a good insight in how we actually trade, how we manage positions, and you know, the pros and the cons of actual trading, and whether you can fit it into your current lifestyle. So that's it from us today here at Trade and Train. If you did like the video and would like to know more, drop us a comment below. You know, if it's a chart you want us to look at, anything to do with trading, please drop us a comment below. Make sure you hit like, share and subscribe, and we look forward to seeing you on our latest video.